Live from Cornelius, North Carolina, it's time for Trending Thursday. Good afternoon, everybody. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Love having you guys here. And yes, Joey, I think I'm going to take care of that. Well, maybe I wasn't. All right. Glad to have you here. I got a special guest here. He's going to come on in a second. But I'm sure, well, before we start off, if you can hear me, make sure you chat in the chat box. Let me know that I am coming across loud and clear, preferably with VV Nation, because that's who we're here for. We're here from VV Nation. Let me know that we are coming across loud and clear. And I'm sure Snoop Dogg, how did that get to be Snoop Dogg? Snoop Dogg doesn't come in. He goes, hey, welcome to the LBA. We got to say live. No. Snoop doesn't do that. Snoop doesn't do that. All right. What I'm getting ready to say is, I forgot now. You just totally threw me off. If you're brand new to the channel, hit the subscribe button, hit the bell icon. And if you like the commentary, by all means, please make sure you hit the like button. All right. The biggest question that everybody out there is asking, and I want you to answer this. The biggest question that everybody is asking is, the news came out today in regards to what's going on in the market. Bad news. But the market's going higher. How many of you are asking yourself that question? Why is the market growing higher? Type a 1 in the room. How many of you are asking the question of why is the market going higher? Type a 1 in the room. All right, because that's what we're here about today. That's what the alert was asking to see. How many of you are asking the question of why is the doggone market going up today with bad news? All right. So today I'm going to try to answer that question. I've got a couple of theories that are pushing the market higher. This market reminds me of a colonoscopy. I'm going to push the crickets because that's not a fun visual, so I'm not going to do that. But we're going to it's the machine's algorithms. That could be a part, but again, I've got a couple of theories to talk about in regards to that. I'm going to start to talk about some news of why the market is moving as well. But before I do that, I'm going to bring on my special guest, whose name is Todd Schaefer. He is the manager of research. He does a lot of heavy lifting for us here behind the scenes. And Todd, come on board. Tell them who you are and what you do. Well, I did that, but do it again.
Hi, I'm Todd. I'm the manager of research. How was that? You know, I was at the Open. I wasn't sure if I was on WWF or like Monster Jam or something.
You know, I try to keep everybody on their toes in regards to how we get this all started. All right.
Well,
so Todd,
you say fair warning. We've known each other for a lot of years. We used to travel a lot, so we banter
a lot,
which can be good or bad. It depends.
It's always good.
You just never know.
It is always good. All right. So the reason why I wanted to bring Todd on, a couple of reasons. He's going to talk to you about a webcast that he's got going on today. But I wanted some of his insight as to what I'm going to talk to you about, what's going on in the market. So I'm going to move over to our news stories real quick. All right. There you go. Can you get us to both? There we go. All right, U.S. stocks fall. Now, this is one of these wackiosity days. Pre-market, we were rising. The news comes out, we fall hard, but we trade off our lows enough that we're back in the positive as inflation data crushes hopes that the Fed will slow interest rates. I think that the Fed is at a point where if the inflation news continues to look bad, he's going to have to go after aggressively raising rates the way that he has been. He's going to be hawkish on the market. And it's interesting that even with that news, we still fall off. We fell off, but then we just rose. We're going to get into that in a second. The benchmark. The Fed's benchmark interest rate may peak above 5% after the September inflation data, some economists think. All right, this is a Market Watch story. Again, bad news. Market is still going up. This is big story right here. That Social Security cost of living adjustment will be 8.7%. So in a time where we have a recession, air quotes, recession, because people are saying, oh, did you hear that Janet Yellen said yesterday, oh, I don't see anything wrong with the market. The same people that said that inflation was intransitory was sitting back and saying, oh, There's nothing wrong with the market. Anyway, a big adjustment in Social Security, which I think is a good thing. But what does that mean? We're spending more money in a recession where we're trying to go after inflation. Those things just don't mesh together. They don't mesh together very well. All right. And the last story, and this one I really want Todd's input on. U.S. oil inventories jumped by 9.9 million barrels last week. Why? I guess it's got to be, and Todd backed me up on this, I guess it's got to be on demand that we found oil. Not only did we find oil, we found 9.9 million barrels of oil. Is that a demand thing?
Well, if you're looking for an increase in production, the news is actually the other way, right? So we think of oil as a global market, and you have OPEC saying they're going to pare back. Well, if you have rising inventories, the only other string you can pull is a drop in demand. And with a world economy that's slowing, it seems to fit a narrative where the slowing demand builds inventories and, obviously has impacts on price.
And oil is moving up, as the Struggles Reel says. It is moving up. And so now I'm not going to talk about the rest of the stories that I have up. I want to get into a couple of things of why I think oil is, that the market's moving up on a day where we had bad news. I'm going to get back into the software. All right, so from this perspective, all of the major indices are up today, all right, to include our VectorVest composite up bigly. But I'm going to bring up a graph. I'm going to bring up another graph first, bring up the market timing graph. I don't want to do that here. I used to want to do that. I don't want to do that here. So one of my theories, and Todd and I talked about this morning, is the movement of the VIX. All right, the volatility, the fear factor on the market. And what you're looking at here is a VectorVest performance graph, which tracks the white line, the VIX, and the VectorVest composite, which tracks over 9,000 stocks. The correlation here is all the way since the November high. What has the market been doing? Going down. What has volatility been doing? Going all over the place, but if you look at the trend from March of 2022 until now, look at the trend of September or August 22 until now, the overall trend of the market is down, and the VIX is all over the place, but still elevated above the value of 20. So I'm going to draw a horizontal line at 20. When the VIX is over the value of 20, the market is showing a lot more volatility. More volatility shows that there's fear in the market. So Todd and I talked about this this morning, and from the perspective of why the market is going up today on the bad news, I want to show you several different time frames of the performance between the VIX and the VectorVest composite. This is a 1-year view. All right. Volatility is rising, the market is falling. Okay. I'm going to move from a 1-year view to a 6-month view. Look at that. Volatility is still high, but the market is down. Notice that there was a point here where we were at lower volatility, below the value of 10, and the market was running. Good deal, right? Let's put this onto a 3-month view. Look at that getting a little closer. Still, volatility is high, and the market is being beaten up. There's that divergence. Now, let's get to a 1-month graph. Still, high volatility, market, and as the fall in volatility starts to happen, the market will start to pick up. This is what I really want to get to. Today is noise. We looked at over all of those different time periods. The market's moving down as volatility is rising. This is today. This is today. Look at the market compared to the VIX. The market's moving up as the VIX is moving lower. Now, that's a main theory that I have, is the movement of the VIX pushing the market higher. Todd, now I'm asking for your input in regards to what I just talked about.
Well, let's go back to the 1-year look. So what we see is even though price is trending, right, obviously trending lower consistently over the past year, the inflection points, though, are picked up by the VIX. And so as the markets sell off, volatilities increase, and that volatility is tending to peak around the same place. I can't see the value on your graph, but what do we got there? 35-ish?
I got 80, 86. Oh, remember that's
You're on a percentage basis.
It's right. It's
So,
not on the percentage, right?
so we're looking at fairly consistent peaks in the VIX. And of course, when the VIX starts pulling back, then that is typically because the price starts rising, volatility start dropping, right? So it's kind of an overextension indication on a technical application piece where I get to these elevated values, I'm getting closer to the turning point. So there's potential here that technicians are looking at this saying, well, okay, elevated VIX on the breakdown, right? That's the start of the next uptrend. Well, bear market rally maybe because I've got this extended downtrend that I'm still very much in. Right, I'm still hitting lower highs and lower lows, so I don't know that I'd get all giddy just yet. And maybe they're right. Maybe this is the bottom. But typically, we look for, for our bottom fishing approaches, we look for the capitulation point. We look for a catalyst that changes kind of the animal spirits. Right? Is it a company that made money even though the economy is in horrible shape, as evidence that things are turning around? The Fed says, well, okay, forget this hawkish thing. We actually think we'll be dovish instead, right? So there's some kind of an event that's going to have broader impacts on the economy and therefore business climate to get the market to turn around. I'm not seeing any of those. So
Nor am I.
This is driving me toward this kind of a technical explanation where people are trying to get in front of what they think is the next bounce.
How about this? Let me ask a question. How many think that the levels that we are on the VIX and where we are from possibly the market being oversold, how many of you think that the Fed will either pause or drop or only raise rates 50 basis points? Type of 1, if you think that's the case. Type of 2, if you think he becomes even more hawkish given the inflation data. So type of 1, if you think that this is going to slow him down a little bit. Type of 2, if you think he's going to keep on rocking and rolling. And you know something, that might be a good poll, but I got a lot of twos. That may not need a poll. A couple of people actually think that this is enough to slow him down. So,
Interesting. Put up a 1-year graph of the VIX, Glenn.
Yep.
And you'll easily see the topping values, but you'll also notice that there isn't an absolute top boundary, right? So we can go as high as 40.
And we have. Here, we went to his 38.94.
So here's the question I would want to answer. Is the market bouncing because we ran out of sellers? Or is the market likely to sell into this rally and collapse?
I'm with the sell into this rally and collapse. I think that the news, the negative news, the high inflation, not bringing it down a little bit, or just not bringing it down a little bit, it's going to, I think we sell into the rally.
So that's our hypothesis, right? So we look for the evidence, though. We're always evidence-based. So even if you answered the question in the affirmative that you think it's going to go higher, you would look for follow-through. You should start picking up changes in market timing signals, et cetera, and then you could start bottom fishing. If, however, this is just a bear bounce, then it'll peter out and you'll see follow through to the downside. You'll establish the lower low, breaking that weak support, right? So patience is probably a good prognosis here to let the thing play out.
All right. So my first theory was to look at the performance graph of the VIX compared to the S&P, to the VectorVest composite, to get an idea of, looking at different time periods. Today, volatility is falling while the market is going up. But if you look at the 1 year, the 6 month, the 3 month, the 1 month, volatility is still high, not pulling enough for the market to really rebound for any sustainable amount of time. All right. So that was theory number one. Todd, you want to add anything more than that before
Well, I was
go
going to say you'd expect to see daily movements of the VIX inverse to the market. So the key isn't the daily move, it's the trend. So if you go into a 3-month look at the VIX, okay, it's down today, but where would you say it is on a trend basis?
And look at that. That's a different graph, but look at it. Look at it. It's trending higher, and it's right off of a 3-month high. I'm going to put that level of resistance right there at a 3-month high of 34.79 on the VIX.
So it came back for a retest, right? So technicians might say, okay, the next move should be lower. Okay, well, how much lower?
How about this?
Yeah, exactly. So is this a change in trend, or is this just now some oscillations around a high as the market tries to figure out the next move? Well, I don't pretend to know the answer to that, but I do know that, I don't make my decisions based on one bar of anything.
And this level that we just drew on the graph of 28.13, 28.13, still above the value of 20, still showing a lot more volatility in the market. But from a technician standpoint, I've got a level that I'm looking for on the VIX to see if it bounces off that level of support. Yes, Todd?
Yep.
All right.
And if you think about it, in the larger scheme, if this thing does start pulling back and the market starts rising, what's going to happen? Well, you're going to see the primary wave change, then you'll see a green light, then you'll start getting kickers, right? So think of these in terms of their cycles, in terms of the flow, instead of trying to call the actual top or the actual bottom, just get in the flow.
So, theory number 2. I'm going to go to the viewers tab. And normally I go through a lot of different lists. I'm going to go straight to one list today of my picks for you. Today, I went through the process of just looking at top VST stocks. I've got 10 of them. And I'm going to let Todd, who is also one of the coaches of the Successful Investors course, go take you through what he looks for the purposes of how to better get in and out of trades and stocks that you're looking at. So I'm going to highlight all of these stocks. Again, these are the top 10 VST stocks in the database. I'm going to graph these, and then I'm going to let Todd do his thing right now. So you'll only see him, but I want him to take a look and walk you through the process of, from a coaching perspective, how he uses the Successful Investor course to help you become a successful investor. Take it away, Todd.
All right, well, let's minimize your graphs, because the process really starts with defining your objectives as a trader or investor. Right. So in successful investing, we take a position trading investing approach, right? A more prudent kind of approach. So particularly the longer time frame you have, the more important fundamentals become. So minimize your toolbar there, and let's take a look. The first thing I notice, if you scroll all the way to the right, is we're obviously heavily in the energy sector. Well, it's the only thing performing right now, right? So that isn't typically surprising, but you also don't want to load up all in one sector, because when that sector finally does break, then so does your portfolio. So I would only be really looking for a couple of candidates out of this list if I was even interested in playing the contrarian play. Right, so we like to go with the flow, we like to go with broad market movement, but you'll often see when the market is in decline that particularly commodities can continue to perform, like energy. So the question is, well, do you want to play in that space because it's still going up and there's an opportunity there, even though you're going against the broader market movement? Well, it's a more aggressive approach, but it's certainly one that you can take. But that's the first thing I look at. Now I scroll back to the left and I say, well, okay, I'm most interested because I'm looking for longer term trades. Typically, I'm looking for, RV and RS scores that are more robust. They don't have to both necessarily be above 1, but I don't want something with an RS score of 0.2, right? Or an RV score of 0.2. Right? I want to have some fundamental strength in the company. And of course, I want it to be in an uptrend. So one of the other things I note here is sort by RT. particularly when I see RT values getting above that 1.7 threshold. That's just kind of a warning flag of, hey, make sure you look at the graph and make sure this thing is not going hyperbolic, right? That it's not taking off, doing a moonshot where it's accelerating so fast it's going straight up, because typically those price patterns are getting overextended and you're likely to see a pretty big retracement back to mean. So we'll look at that on the graph here in a minute, but I'm just kind of making a note to myself as I go through this. So scrolling over to the right, I see that they all have positive earnings, which again is important to me in a more prudent kind of approach. And they have earnings growth rates in double digits. So that's fantastic. And particularly in an economy like this or a market like this, I like to scroll over and look at sales growth to make sure we still have top line growth, which is the engine that's going to drive those continued earnings beats, right? So if they don't have sales growth, well, we don't have sales, so I'm guessing that's an ETF, right?
I'm thinking so too, yeah.
But if they don't have sales growth, then I'll probably cull it from my consideration, because in weak economies, right? I've lived through a couple of recessions myself, right? In recessions, there are still companies that make money, right? It's not, they may not make it at the same rate, but they're still profitable and they still are investable. Those companies are typically the ones that continue to sell product to people. Their product is still in demand, right? A lot of companies, you'll sell off inventories and then you'll lay off workers. You've cut all the costs you can cut. And if your sales aren't driving the top line higher, there's not much more you can do other than hang on and hope you survive, right? So having positive sales growth is a great way to put the odds in your favor of a future valuation. All right, so I've kind of got an idea of these stocks. Let's go back and just sort them by VST. So this is a balanced approach, right? I've got the strongest combination of value, safety, and timing at the top of the list. That's where I'd prefer to be. But I always want to check the graph to make sure that the market and I are on the same page, because we all know, right? This is a good example. This current market, there are companies that have great fundamentals that are continuing to make money, and they are getting pummeled on a price basis because the market is repricing the market. So here we are, we're trying to dabble in a narrow slice of that market in the energy space. Let's take a look at some graphs. And we start because of my time frame. Let's do this, Glenn. Let's look at, put it on a 3-month window and just kind of flip through these. So we're looking at a 3-month time frame, which would be reflective of a shorter holding period. So if I was just trying to swing trade these stocks, I might look for stocks who have rising price patterns. That's a great chart, right? Have rising price patterns in this shorter time frame, because my objective time frame is shorter. And I'll play the retracement, that kind of thing. I'm playing a much shorter, faster, more aggressive game. Now flip back to the 1 year. When I'm taking more position trades, then I'm more interested in the longer term time frame. And because of that, I'm also more interested in the fundamental performance, the earnings performance of the company, because sustained uptrends are sustained by rising earnings. There's a high correlation there. So what I'm looking for is price action is going bottom left, upper right, smoother the better, driven by earnings performance. Bottom left, upper right, smoother the better. The shorter my time frame, right, the more technical I get based, the less those fundamentals matter. But if I have a stock that, let's flip through, try to find me one that is not going up, even though earnings are. So I was going to work with corn there. I can.
Oh, you want
Matador Resources? That's fine, right? It's higher on a year-over-year basis. But really, I've been trading sideways since the market peak, right? So even though earnings has continued to improve, the price is not. So I want the best of both worlds. I want the market to recognize the improved performance of the company, the higher valuation, and that's reflected in the rising price. So as you kind of apply these principles, there are some graphs that are going to look better than others that are absolute duds, right? Particularly if earnings are actually falling. So that's a great example of a long-term chart that doesn't look so great. Although you might make a case for some kind of a breakout above those highs, but that's a shorter term, right? In the short term, you see the uptrend accelerating. RT is going to higher highs, right? So I've got a short-term acceleration, but the longer-term trend is not consistently higher. So the cool thing about VectorVest is that depending on your objectives, you can use the research, the information to make intelligent decisions about the trades that are right for you. Right, so I'm going to give preference to something like this SGML chart because it's going bottom left, upper right. Yes, it has more volatility on the right side of the chart than the left, as the market has been more volatile. But I can see that it's still driven by improving earnings. They're positive and rising, right? So that's a good sign. And price is still in trend. I'm coming off the most recent low, right? But that's a better entry. I'm still in trend for that trade. Now let's resort the list by RT. Let's talk about this idea of overextension. And chart them again for us. Let's take earnings off this time.
What time period?
Take off stop too.
Okay. What time period?
1 year. Notice how the right-hand edge, how vertical that last move was. Right? And you get the V-shaped top, a sharp pullback, right? Because the price advanced so fast that people are nervous about giving back their gains or about taking their gains before the rug's pulled out from under them. Right? So that increases volatility, that increases price range, right? So all of those things kind of come together. And let's put on, do you have a 40-day simple moving average maybe? Here's the idea of overextension. Do you notice how on the left side of the chart, right? Think of the distance as how far price is getting away from that 40-day moving average once it gets above. And now look at the right-hand side of the chart, how far price gets away from the moving average before it reverses. And that the current interval is similar to the one we had before, and the pullback back to that moving average is typically pretty sharp. So this is a visual representation of what overextended price looks like, and the slope coming into the peak is indicative of how sharp the retracement is likely to be. Now, sometimes the price just congests right at the, just off of the high as the market digests the move, which would be kind of the best of all worlds, but sometimes not, right? So the key here is, depending on how aggressive you want to be, for the prudent investor, buying in late into that move late because you're trying to hold through the pullback is pretty difficult to do well. All right, so let's just take a look at the first couple. Now that's interesting. See how coming off the most recent low, it was back in, right in there.
July.
The slope of that line, see how much steeper that is than the prior run? That's what's driving that RT number. But the price consolidated at the end of that move. Instead of pulling back, it just kind of moved sideways. So looking at this chart, I say, well, okay, the move into this current time frame drove that RT number up, but actually, if I'm looking at this as a parabolic move, I see a consolidation pattern that has a breakout, and it's actually a very tradable chart pattern. So that's why you want to look at the chart. Right? You don't want to just take the number. The number kind of raises the flag for me, but I still want to look at the chart so I can get an assessment of where support and resistance are, where trend lines are, so that I can gauge breakouts. Right? But these are some of the principles that we teach in successful investing that help people understand kind of the story of how the stock has been performing, and therefore the best candidates for our particular objective, which is position trades, more investable kinds of stocks. And then if they pay dividends, so much the better, right? But our initial entry or analysis is on a stock basis, and we take the dividends as kind of a spiff. Right, so after you go through that exercise, you'll have 2 or 3 that you like the most. And then typical to what we teach in all of our classes is let's make sure on the hard right edge, the price is continuing to hit higher highs, start continuing to move higher as the market continues to move higher on your entry day. And just take the 1 or 2 stocks that are moving the best in that scenario.
All right. Do you see the screen?
I do.
Okay.
That's us. So we have in the software, if you're a subscriber, you already have access to the Quick Start course on the training tab within the program. But that's a quick start course, right? By definition. So all told, if you watched all those videos, it's about 90 minutes total. Well, we had a need from our subscribership to kind of go deeper into each of those topics. So now instead of 6 15-minute videos, we now have 6 weeks of coursework where we really get into the fine details. I like to say into the weeds. And we talk about, okay, here are our stop losses, and this is how we use them in combination, and when and how we make the adjustments to them based on the performance of the stock. Right? So it gets down to that granular level of this is what you should do now. Right? So we teach the underlying principle, and then we teach our methodology, a methodology that Dr. DeLito developed early on 30 years ago. Right? So it's a time-proven, time-tested methodology that we like to impart for those who want to learn.
So today you have a webcast, yes?
We do. So, excuse me, we'll go through in this webcast. It's a free webcast. We give you, we always want to teach, right? In all these webcasts, we want to teach concepts. Of course, it's an hour long, so we can't teach the whole course in an hour. We're not trying to do that. We're trying to give you a feel for what you would learn in that course. And even if you don't take the course, you would walk away with more knowledge. But we're doing that today, this afternoon. And of course, it's an opportunity to also sign up for the course if you want to do that. But first thing I'd say is let's just take a look at the webcast, because you'll learn things there that are similar to what we just talked about here.
All right. So today at 4:30 here on our YouTube channel, there is going to be a webcast that lays out the exact criteria to use to pick the right stocks, especially now. Instead of wondering what to do, we're going to give you sort of like, I want to say a rules-based way of trying to find the right stocks to get into, Todd, yes?
Well, yeah, so the whole VectorVest approach is that we want to get out of our own heads, right? We don't want to respond to the narratives and the stuff the market throws at you, because the market doesn't have your best interests at heart. So the whole VectorVest methodology is one that says, well, let's look for the truth in the data and come up with a rules-based systematic approach to that analysis so that we can make intelligent decisions, rational decisions, not emotional ones, because the emotional ones are usually the ones that end up blowing up, right, where we make our mistakes. So we talk about probabilities, not knowing things. And in that approach, you can have different rule sets for different approaches. So with successful investing, I like to say we're getting back to the fundamentals. So if you struggle to find consistent performance, consistent results, then you're a shoo-in for this course. Because even if you're aggressive instead of prudent, the principles we're going to teach you on how to design a trading system and apply it to your trading is useful across all time frames, applicable across all time frames. So if you're struggling at any level to find consistent results, I think we have some things we could show you.
All right. Again, Joey's put the link. It's pinned at the top. to click on to register. It's today at 4:30. It's a free webcast. Please come and join Todd as he gives more insight on how to make you more of a successful investor. All right. It's really straightforward. This is easy to do once you learn how to do it, and it keeps you out of trouble, keeps you out of hot water, especially in times during now. Now, a lot of people out there are scared to be in the market right now. And Todd will walk you through, between him and Brian, will walk you through what you need to do to still be successful, even in troublesome times. All right. So,
well, and the beauty is you're not left to figure it out on your own on a whim, right? Because we all respond to that fear of missing out thing. You go, oh, the market's up 2% and I wasn't in, I missed the move. So, well, no, you didn't. You missed a bounce day. You didn't miss a move. So in a systematic approach, they say, okay, well, nice bounce day. Thank you very much. But I recognize I'm looking for a trend, not a bounce. So I'm going to wait for my signal, whether it's a green light or a confirmed call. It doesn't matter. I'm going to wait for my signal as evidence that the move requirements have been met. And now I don't have to worry about, right? I open the software, I go, well, I didn't get a green light. So you know what? I could just log off and actually go spend time with my significant other, walk the dog, do something else. So you don't have to spend 4 hours a night looking at charts when you really don't need to be buying anything anyway.
Right. All right. Folks, one, I want to say thank you to Todd for being here. Number two, if you liked what he had to say and you found it useful, hit the like button. I think Todd always brings a lot to the table when he teaches. He's an amazing individual from that perspective. He puts things into a scenario that you can very easily understand, especially using the VectorVest system to help you guys to make money. So
I feel like you're shining on me to get free lunch or something.
Well, our schedules have been so jacked up that I haven't been able to get me to free lunch. So what are you doing tomorrow?
I'm buying you lunch.
Nice. Okay, then. I like that. All right. We're going to Tenders then. I want to go to Tenders.
All right, done.
All right. So with that, thank you, Todd, for being here. Don't forget, click on the link in the chat to register. All you got to do is register. Put your first name, your last name, your email address. Register for the free webcast today at 4:30. All right. So with that, Todd, thank you for being here, my friend. I appreciate it. Always appreciate having you on, and I think VV Nation appreciates having you on as well. All right. See you, buddy. All right. So now next, what I'm going to do is I'm going to finish up. I like the time that Todd took today to talk. He took a lot of great time with you. So I've got a couple of other things that I want to show, but I appreciate him taking time out of his day. He was doing another webcast that he cut short for us today. So again, hit that like button, folks. He didn't have to do that, and I appreciate him doing that. His schedule, both of our schedules are kind of tight, but he squirrels in some time to make sure that he could be here to take you through that principle of what the successful investor looks for, and to talk about the webcast that'll be going on today at 4:30. Todd is the best. So much knowledge. I agree with you. Todd is awesome. I agree. Todd is the best, and the Successful Investor course, highly recommended. This is a lot of people in the room, folks, who are subscribers to the software that have taken it. Todd is the best. Todd is awesome. NC, baby. That's what I'm talking about, too. You hit the like button, but leaving to have the... Hey, have a good day, Michael. Thank you for being here. All right. So let's finish up real quick. I'm going to finish off with a couple of other big stories that are going on today. Thank you, Joe. Go ahead. Going on today, big news. Kroger in merger talks with Albertsons. I don't even know anything about Albertsons because they're not even in my neck of the woods. Todd said that they're in central USA, but it's a big competitor for them. That could be big for Kroger. That could be big for the stock. How many of you are trading Bitcoin type of 1? How many of you even care about Bitcoin type of 1? If you don't give a flying hootenanny about Bitcoin type of 2. I want to see where y'all's heads at. If y'all don't give a flying hootenanny about crypto type of 2, but how many of you are investing in crypto type of 1? I'm with a lot of the 2s. I'm just giving you, that's my feeling about crypto. I know they're going through crypto winter and all that kind of stuff, but you know something, for those of you who are trading, it's okay. I'm not, it's not a bad thing, but I want to bring this to your attention. Bitcoin falls below 19,000 after the last U.S. inflation report. This is today. Crypto is getting smoked like a pound of bacon. Yeah, that's it. It is. But at some point in time, you got to say, even with crypto, how low can you go? And it won't go low forever. But a lot of people, I think, I did a story a while ago, last year, talking about how retirements were putting some of their money into crypto. I wonder how those retirements are showing up now. All right. So, man, and Stock Times says from 65,000 to under 19K, a lot of people are getting hurt with crypto. A lot of people are getting hurt with crypto. And for those of you who are trading crypto, again, I'm not putting you down. You know something? I've got some crypto sitting in a shoebox that's losing a lot of money. I'm hoping that one day I wake up and that shoebox of crypto turns into $100 billion. And if that does, that'll be great. But it's not money that I'm worried about. It's no money at all that I'm worried about. What's the latest inflation picture, Roger? It was at what was it? Let's go to investing.com. The latest, I think it was 8 something. Tools, economic calendar. Where's it at? 8.2. 8.2. It was forecasted to come in at 8.1 and came in at 8.2. The previous was 8.3. So some of you out there say, hey, it went down. Really? That's all I got to say about that. Really? That's all I got to say. And this, from the forecast, it went a little higher than the forecast. That's why the market got crushed at the beginning. But again, I gave you 2 theories. The 2 theories were the whole idea with the VIX and looking at those different time periods, that today there was a big drop off in the VIX compared to the VectorVest composite, which shows that the market was responding to the VIX falling. That's my first theory. And the second theory is that this run today is energy driven. It's energy driven. And I want you, I'll go back. I need you to understand. I need you to understand that this is a lot of noise. This is a lot of noise. I don't want nobody to get all out there. Go back to the graphs. That's a lot of noise. Here's a 1-year look. High VIX, low market. And I look at today, though, it's high market, low VIX, lower VIX. But no matter what time period I look over, the market's getting beaten up because of the VIX is high. All right, the volatility on the market is high. Today, it's a little bit inverse. So that's one of my reasons why it's moving up today. Covered and also chime in that this is an energy-driven run-up. All right, Glenn, what's your take on OPEC cuts oil export? You know something? I'm thinking that OPEC is sitting back. They're a little pissed because with all of the extra oil that we found, we're going to still be able to keep the oil price low here. All right, and they're like, yo, we stopped the flow of oil out to stabilize oil prices to make it go higher. And you got all this extra oil, which is going to help to keep it lower. You're going to screw us up. So, and then the president said that there's going to be ramifications. I don't know what that means. There's going to be, what is he going to do? Is he going to go over to OPEC and slap him around? I don't understand that. There's going to be consequences. What kind of consequences? Okay, that's me. That's just me. All right. So there was the Kroger story, another story about Bitcoin. How about this chip space? TSMC capital spending forecast trims the capital spending forecast. With all of this that's going on, not only with chips, with the cutting back on the chip business with China, they're getting pissed off about that too. So they don't get better tech based on the chip stuff that we're doing with them. But TSMC trims the capital spending. That's another thing of companies cutting back on what they're doing. All right, plain and simple. Walgreens, quarterly sales fall, fewer prescriptions, and COVID-19 vaccinations. Remember, all of these stores were giving COVID vaccinations. We're not giving them out anymore. Nobody cares. Nobody wants them anymore. I shouldn't say nobody cares, but nobody's getting them anymore. So if that's Walgreens, what about CVS? Wondering if the same kind of thing is going to fall in line with CVS as well. Real estate. I'm big on DRV. Real estate, and that's the bearish on real estate. Real estate companies grapple with high interest rate hedging costs. So prices of certain derivatives, key word there, that shield businesses from sudden jumps in interest rates have soared in recent months. Real estate is going to be under some selling pressure, and I think DRV is a good stock to be in. And those are all my stories. So let's get back into the software. Let's go to the viewers tab for my stories, the big news stocks. And I'm pretty much going to stop here. There's not a whole much that I want to give out today as far as short-term plays, swing trade plays. Right now, I want you guys to just keep your eyes on your stocks. All right. If you're in Contras, DRV is taking a hit today. One day doesn't make a trend. You have to go back to the whole idea. Are you overall bullish or bearish on the market? If you're overall bearish on the market, DRV real estate is still a good place to be. If you don't want to take a hit like 6%, then you get out of them early, like somebody else said. Somebody said they got out of their Contras early today, and that's fine. I'm long-term bearish on the market based upon what's going on with inflation, so I'll take a hit of 6% today. Taiwan Semi is up 4.91%. Kroger up today. Walgreens, even though sales fell, it's up today. Well, understand this too, that 80% of the stocks of the market move with the direction of the market, even if some of the news was not so good. Bitcoin, that's what we track for Bitcoin, BTCS, and a little bit of a hit today. All right, so these are the stocks that were making the news today. But the big thing is I wanted to talk about today, and we did talk about it, is why is the market going up when the news on the market is so bad? And how many of you are in line with my theory about the volatility in the market? Type a 1 in the room. If you think that either you don't understand what I said or you disagree with what I said, type a 2. All right. I'm just curious to know how many of you are on board with that theory about what's going on with the VIX, and that one day, that big change, Ravi, I'm not going to look at Lace. The big change in the VIX makes a big change in a day like today. But I still am overall bearish in the market. There's no good news that's going to sustain the market moving higher. All right. Nobody says the algos are reacting to the VIX drop. I'm thinking the market's been down for the last few days. It needed a relief. I think a bounce or a relief is okay. I don't think that the news is enough to turn the market around into a run. The market is going up because the dollar is going down. The Mexican peso is more, not, the dollar is still up. The dollar is still up. And that's why I'm still not big on gold as well. I'm going to show you that as well. Let's go look at another performance graph. Let's go look at, I'll go look at GLD. GLD, that's not what I wanted. I wanted a performance graph of GLD. And I'm going to put on the UUP, put on the dollar. All right, put that on. And I'm going to put that on for the last 3 months. The dollar's still strong. It fell today, all right, and it's peeling back a little bit, but the dollar's still strong. So Lou, I wanted to show you that. The dollar overall is still strong. Roger says, high VIX, overpriced options, good time to sell them. Absolutely. Sell them, get that premium. Sell them, get that premium. This is a great time for selling options, folks. All right, but the dollar, Lou, I hear you. It's pulling back, but still high. Pulling back, but still. And even at the fall of the dollar, gold is still falling. All right, so I'm still not a big fan of gold, nor am I a big fan of crypto. XROF is up. Yeah, it's up because they won some award, and I'm making money on XROF, so I can't complain. All right, folks, I'm done for the day. Put me on my ending screen, Joey. I'm done for the day. I love that we had the time with Todd today. He took up a lot of time, but I think it was great time. I got 89 likes. You guys need to give that guy some likes. It was worth it for him to come today, cutting one of his live streams a little short to be here today. I appreciate him for doing that. For that, folks, he deserves those likes. You know, he does deserve those likes, and I love having him on board as well. All right, so I got 95. Well, if we get to 100 before we do, we do. But I'm thankful that he was here. Nope, no go Padres. Go Yankees. Go Yankees. A great presentation today. Todd is fantastic. That is the man. I like that. So why are you being a hater, Joey? That wasn't from me. That was from VV. That was from VV Nation, Joey. You saying boo to VV Nation?
Yankees.
You saying boo to VV Nation?
Said go Yankees. I don't think VV Nation said go Yankees.
VV Nation says go Yankees.
I don't see that.
All right, somebody from VV Nation put up there, go Yankees. All right, we made 101 likes. Awesome.
Ooh, there you go, Boston.
No, because Boston is she's not a real baseball fan. She's Boston, and they were garbage this year. Oh my gosh, they were garbage. There we go. Thank you, Kirby. Go Yankees. That's somebody from VV Nation. Way to go. Folks, thank you for being here today. I appreciate it. Today is one of those days. The market is wackiosity going on. But you know something? You're in a good place to keep you solidly in place for what to do in the market. Folks, we're not here to just talk about, hey, go buy this stock because we're here to educate you. And I'm proud of what we do here. And I'm so glad that you guys support VV Nation and what we do. So with that all being said, ready for NASCAR this weekend. I'm a NASCAR fan too, believe that. The Yankees suck, says VP. That I can't say I'm gonna ban you or nothing. I can't. The Browns are great, whatever. All right, so I still love you guys. I love you guys to death, and I appreciate you supporting us. With that, adios, arrivederci, ciao, au revoir, sayonara, aloha. To all my peeps in Hawaii, still praying for all the people like Kirby in Florida. Continue to keep doing what you're doing. Salam, shalom, namaste, yasu. Until the next time, folks, see ya.